But with that, let's talk about the key earning to track today. Automaker Tata Motors will be reporting second quarter numbers. So Sonia is here to tell us what we can expect. Sonia, good morning.
Hi, good morning. Thanks for that. So for Tata Motors, it's expected to be a good set of earnings this time, led by a low base, improving chip availability for the JLR business, as well as a pickup in the production numbers and an improving trend in the passenger vehicle business. So overall, if you look at the core numbers, we're expecting a revenue growth of 32% at 81,366 crores. The EBITDA will more than double. As I said, the base was very low same time last year. So expect a good jump in EBITDA. The operating leverage has also improved because of a fall in raw material prices. So the margins are expected to surge to 10.2% versus 6.6% same time last year. And the Tata Motors had posted a loss same time last year to the tune of over 4,400 crores. We're expecting them to return to profitability this time around. Now, both the businesses, passenger vehicles and commercial vehicles, have done quite well in the domestic part, and Jaguar Land Rover has also improved. So JLR volumes have gone up 30% year-on-year at 102,000 units, and their India business passenger vehicle volumes, led by a strong showing in the electric vehicle space, is up by almost about 70% year-on-year. The commercial vehicle volumes have also improved substantially, and the margins for the India business will go up because of the price hikes that were undertaken as well as the operating leverage. Overall, the margins will definitely improve also because what happened in China is that there was a higher number of sales compared to what we saw last year for Jaguar Land Rover, and hence, since the geographical mix has improved and China is a high margin vertical, JLR's overall margins will also look much better than what they saw same time last year. So good set of numbers expected, but more commentary awaited from the management later in the evening.